And so, as promised, it's 1:30 and I'm back here with updates from the world of business. This is what we have for you on Business Incorporated today. Well, in Ghana, the government has approved the first lithium mining, and that's against electric cars. KPMG has done an Africa Doing Deals ranking. South Africa tops the list. And by now, the Prime Minister of the United Kingdom, Rishi Sunak, should be in Egypt amidst the Hamas and Israel war. Good afternoon and welcome. I'm Ini John Mekwa. We head off to the market. Today I have to warn you, it's a bloody market in all the major markets that we track. Beginning with Nigeria, it's down 0.18% at intraday. Let's look at the numbers right there. And then you have South Africa also down, even worse, 0.91% at 70,319.06. Other parts of the continent, Egypt is closed today, but guess what? It closed negative on Thursday, down 2.26% at 21,616.60. Kenya also closed yesterday, marginally down, but I mean, they've lost that 100 index point, and that doesn't look like they're regaining it anytime soon, unfortunately. We move over to the Middle East. The color is still the same. From Abu Dhabi, two of these markets do not trade on Friday. So we only have Abu Dhabi for intraday, negative 1.26%, 9,309.3 to Dubai, also minus 1.83% at intraday, negative also 3,738.44. Other regions that are not trading today, they also closed negative on Friday. Saudi Arabia, 0.56% in the red, and Qatar also 1.54% in the red on Thursday. I don't know what happened to the market, but it's all red on this Friday. Profit taking may have caught up with them. Let's move over now to Europe and see what's happening there. Obviously, the war going on now shifted from Ukraine and Russia to Hamas and Israel. And it's nearly 2 weeks since the Palestinian terror group Hamas attacked Israel. And we know what has been going on. Well, obviously, everyone is concerned. But Emily Lashner now from Deutsche Welle joins us from Berlin to tell us more about the potential ramifications and conversations going on there. Emily, good afternoon.
Thank you for having me. Well, first, I'd like to underscore that it will be absolutely devastating for the people living not only in Gaza, but also for Israelis. That much is certain, and it's why leaders like President Joe Biden have called upon Israel to refrain from occupying the territory. Israel expects a ground invasion to be a blow to Hamas, but this is also going to have some impact on Israel in an economic sense. Israel's defense forces have called 360,000 reservists for duty. That's about 4% of its population. And analysts say that tech companies, particularly startups, are likely to face a disproportionately higher share, given that their workforces are younger. Israel is often referred to as a startup nation because of the sheer number of startups in the country. A human resources software provider based in Tel Aviv said that about 6% of the company's employees had been called up. But big U.S. companies with research and development centers in Israel, like Amazon, Apple, Facebook, and Intel, are also going to be affected too. Microsoft, for example, has nearly 3,000 workers there. So the call for reservists is going to test the resilience of the tech community, which contributes about 20% of Israel's economy and is also a significant portion of global activity in cybersecurity, AI, and semiconductors.
What about the finance leaders?
Well, U.S. ratings agency Moody's has put the Israeli government's A1 credit rating on review for a downgrade, specifically citing the conflict. CEO of J.P. Morgan Chase, Jamie Dimon, told investors recently that this may be the most dangerous time the world has seen in decades, citing this war and the one between Russia and Ukraine. Dimon said these conflicts may have far-reaching impacts on energy and food markets, global trade, and geopolitical relationships, and that's certainly what we're seeing now.
What about investors? What are they doing in the markets?
Well, the prospect of a wider conflict continues to push up oil prices. The price of Brent crude today is over $93 a barrel, and Israeli stocks listed in New York and Tel Aviv have sunk to recent lows. Investors can expect continued volatility as the conflict escalates. Stock in Israel's Teva Pharmaceutical, which is the largest generic drug maker in the world, has been on a steady decline the last 10 days, for example. And two chip makers based in Israel, Mobileye Global and Tower Semiconductor, have also seen their market value drop during the same period. Businesses with headquarters, factories, and inventory are going to be affected as the war continues. But so will U.S. stock exchanges. Israel has a huge impact on the U.S. stock market. More than 100 Israeli companies are listed on U.S. exchanges with a combined market cap of more than $150 billion. Israel also has the fourth most companies listed on the NASDAQ after the U.S., Canada, and China.
All right, Emily, thank you so much for that. And we'll have a great weekend in the midst of all of this. Well, Emily was just talking about the U.S. markets. Now we can tell you that stock futures dipped on Friday morning. As traders focus on a recent higher of yield, 10-year Treasury yield. Features tied to the Dow Jones Industrial Average. Looking at the numbers right there in the red again, a very red market. We see right here the Dow Jones down 0.26% at 33,463. S&P 500 follows suit, 0.30%. Nasdaq is also down 0.38%. Well, the yield on the benchmark 10-year Treasury crossed 5% for the first time in 16 years. The 10-year yield, 5.001%, around the first time it has traded above the level since July 2007. Well, shares of Solar Edge tumbled 24% after the company trimmed its third quarter revenue guidance. Knight Swift Transportation gained 16% after beating estimates the third quarter on both top and bottom lines. Let's join Maria Bird now to give us the details of Thursday's trade.
The U.S. stock market fell on Thursday as the Dow Jones was down at 0.75%, the S&P 500 down at 0.9%, and the heavy tech Nasdaq led the losses at almost 1%. Many investors are also watching the Treasury yield bonds as they are marching higher than they have in the last few years. It is clear that investors are concerned that this could mean that interest rate hikes will continue to stay high for the days and weeks ahead. As Chairman Powell stated in an announcement on Thursday, inflation continues to be high in the U.S., which says that interest rates might have to continue to be a bit higher as the economy still seems to be stable. Retail sales continue to be stable throughout the coming weeks. This is clear that investors will be watching to see how the stock market will respond to the interest rate hikes and the Treasury yields continuing to march higher.
Well, it's still red going from the United States to Asia. Pacific markets were all lower on Friday, extending losses from Thursday's broad sell-off. This comes as U.S. Federal Reserve Chair Jerome Powell said that inflation was still too high and would likely require lower economic growth. The benchmark U.S. Treasury, we told you that, crossed 5% for the first time. Let's look at the numbers now. The Nikkei 225, 0.54% down, 31,259.36. The Kospi goes even lower, 1.69% in the red, 2,375. Hang Seng Index also down 0.72%, 17,172. And Shanghai down also 0.74%. Wow, what a way to close the week. For Australia, it's 1.16%, all in the red. Haven't seen a green market today for intraday and even for the close in Asia. Very unfortunate. Let's move over to the commodities market, beginning with oil. Oil prices extended gains on Friday and were on track to rise for a second week on heightened fears that the Israel-Gaza crisis may spread in the Middle East and disrupt supply from one of the world's top producing regions. Brent crude futures was up $1.21 to $83.59 a barrel. U.S. West Texas Intermediate crude was at $90.70 a barrel, and that's up $1.33. The front month November contract expires today. And the more active December WTI contract was up $1.23 at $89.60 a barrel. Both front month contracts are set to record a second weekly gain as an explosion at a Gaza hospital this week and an anticipated ground invasion by Israel troops heightened fears of the conflict appear spreading in the Middle East. Adding to the anxiety about the broadening of the conflict, the Pentagon said that the United States had intercepted missiles fired from Yemen toward Israel. Oil prices are also supported by forecasts of a widening deficit in the fourth quarter after top producers Saudi Arabia and Russia extended supply cuts to the end of the year amid low inventories, especially in the United States. Washington is seeking to buy 6 million barrels of crude for delivery to the Strategic Petroleum Reserve in December and January as it continues its plan to replenish the emergency stockpile that, according to the U.S. Department of Energy. Still in the commodities market, gold prices rose on Friday and were set for a second straight weekly gain, with demand boosted by the Middle East conflict and expectations that the Federal Reserve's rate hikes are nearing an end. Spot gold was up 0.4% at $1,982.29 per ounce. U.S. gold futures added 0.7% to $1,994.20. Gold, often used as a safe store of value during times of political and financial uncertainty, has risen 2.4% this week. We're working for some other things there. Well, gold prices were supported by fears of another Fed rate hike in 2023. And Fed Chair Jerome Powell, in his remarks to the Economic Club of New York, agreed in principle that the rise in yields was helping to further tighten financial conditions, and at the margin, it might lessen the need for additional rate increases. Higher interest rates raise the opportunity cost of holding gold. Spot gold is expected to extend gains into a range of $1,998 and $2,000 within that range per ounce, as it has broken the resistance at $1,972, according to technical analysis. Spot silver fell 0.4% to $22.94 per ounce, but was headed for a second weekly rise. Platinum also eased 0.3% to $888.34. Palladium gained 0.1% to $1,114.53. Well, it's the war everywhere. Now, British Prime Minister Rishi Sunak is set to be in Egypt even as we speak, as part of a trip to the Middle East, where he wants to press his message that there should be no escalation of violence in the region after the Hamas attack on Israel. Mr. Sunak was the latest Western leader to visit Jerusalem on Thursday to show support for Israel and to try to negotiate a way to secure the release of hostages taken by Hamas and ease the provision of humanitarian aid to people in Gaza. Later on Thursday, he met Crown Prince Mohammed bin Salman in Saudi Arabia, where he encouraged the leader to use Saudi's leadership in the region to support stability, underlining the fear that Hamas' attack and Israel's response could ignite regional unrest. In the talks in Egypt, Mr. Sunak will stress the imperative of avoiding regional escalation and preventing further unnecessary loss of civilian life. Meanwhile, still in Egypt, the country is recording diversion of tankers seeking to fill up liquefied natural gas at the country's terminal. A tanker left empty and diverted to other ports after an Israeli pipeline supplying gas was halted due to Israel-Hamas conflict. The CP Catalina tanker has changed course from Israel's Indiku LNG plant and is now heading to the Algeria's Azwi LNG facility, according to shipping data. Chevron has shut down the Israeli Tamar gas field amid the military conflict in the country and suspended exports through the subsea ENG pipeline, which runs from Ashkelon in southern Israel to Egypt. Egypt relies on Israeli gas imports to meet some of its domestic demand, and therefore the pipeline cuts mean that there is less gas available for LNG exports. This year, to date, 50% of Egyptian exports has been sold into European Union and Britain, based on LESG ship tracking data. However, the country has not exported any LNG since July amid high domestic demand this summer and was only set to resume exports in October. Egypt imports about 1 billion cubic feet per year of natural gas from Israeli Tamar and Leviathan gas fields, and that's according to data from the consultancy Energy. Welcome back. Still watching Business Incorporated here on Channels Television. We head to South Africa and say congratulations to them because South Africa has emerged a top hotspot for deal making on the continent as investors prefer its sophisticated financial and renewable energy sector, with Nigeria a distant second. Fresh findings by accountancy and advisory firm KPMG under its inaugural Doing Deals in Sub-Saharan Africa report. Now, according to the International Monetary Fund, this month, South Africa will overtake Egypt and Nigeria to become Africa's largest economy next year, when the continent's most sophisticated country is expected to raise gross domestic product to $401 billion. That's about 7.8 trillion rand. Just ahead of the other two top regional economies. New data from KPMG also revealed that South Africa has a top preferred destination for investment and deal making ahead of Nigeria, famous for its more than 200 million population. And then we move to Ghana, where the government has approved its first lithium mine run by a subsidiary of Australia-based Atlantic Lithium Limited. And that is as part of its drive to benefit from a global move towards electric vehicles. The Ministry of Lands and Natural Resources granted Barari DV Ghana Limited a 15-year lease on the mine at Eyoa on Ghana's southern coast, where the country began exploring for lithium 6 years ago. The prospect is highly valued by Ghana as it seeks to play a role in producing a key ingredient in electric vehicle batteries, demand for which is soaring as countries look to phase out fossil fuel cars. As part of the deal, Ghana has increased the royalty rate to 10% from the standard 5%, and the state's interest in the project to 13% from 10%. We move to Kenya now, where commercial banks leaned on the Central Bank of Kenya for record high liquidity support of nearly 100 billion shillings. That's about $668 million this week, signaling a short-term cash crunch, especially linked to the 44.15 billion shillings T-bonus payment to farmers. The CBK, noting that liquidity was screwed in the market, offered to inject 50 billion shillings via 7-day reverse repurchase agreements, that's repos. But banks made bids worth 99.87 billion shillings, all of which were accepted by the CBK at an average interest rate of 12.87%. Reverse repos are a form of securitized borrowing by banks from the regulator using their holdings of treasury bills and bonds as collaterals. We come to Nigeria now, where the acting chairman of the Federal Inland Revenue Service, Mr. Zak Adedeji, has assured Nigerians and corporate organizations that the FIRS will not further increase taxes, despite its resolve to increase the country's tax-to-GDP ratio to 18%. From 10.86%. Mr. Adedeji said such resolve will not necessarily lead to an increase in taxes or introduction of new taxes, as the President Bola Tinubu's led administration is determined to create a wholesome environment for businesses to flourish. The FIRS chairman had said that the agency under his leadership would in the next 3 years achieve an 8% rise in tax-to-GDP ratio to surpass Africa's average of 16.5% without stifling investment or economic growth. Still in Nigeria, in its efforts to facilitate the transformation of digital business models and markets across all sectors and industries in Nigeria, the National Information Technology Development Agency, NITDA, has been highlighting policies geared towards ahead of its technology conference, and it's geared towards getting more youths into the space. The Director General, Mr. Kashifu Abdullahi, who was on a Business Morning earlier today, said that focus is on including the youth as well as eliminating hurdles around technology that could discourage them to participate in set-out programs.
So the program, we have launched it, and the idea is to create an ecosystem, not just to train people, but after training them, we connect them with jobs. The call for application is we are calling for the fellows, the people that want to be trained to register. We are calling for the training providers also to register. We are also calling for partners, development partners, subnationals, governments, state governments, and local governments to be part of it as well. Then we have placing organizations that place this talent with jobs locally and internationally. So the ecosystem will be created to meet our local talent demands, because every country needs to be digitally independent for it to survive. We cannot depend on any country to build our digital services and offerings. That's why we are training this talent. But looking at our youthful population, as well as the high demand for talent globally, we think also we can position ourselves to be the global net talent exporter, because we have the competitive advantage over any country in the world you can mention.
Well, imagine if Nigeria becomes a talent exporter. How rich will the country be? And we can do it. Well, I think that's a good place to end the program for the week. Thank you so much for being a part of Business Incorporated. We'll start off again next week, Monday. God's grace. Have a great weekend. I'm Ini John Mekwa.